Welcome, traders. Welcome to the SPACs attack. Let's get it started. How we doing, traders? Welcome to the SPACs attack. And if you're a SPAC fan out there, please let's go ahead and start the show with a nice thumbs up. So how we doing out there? Of course, guys, guess what, guys? I'm by myself today again. Guess what? But that doesn't matter. We don't shy away here. We got a jam-packed show for you guys. As you guys can see over my shoulder, I got these two legendaries interviews coming up later today, guys. LiCycle. And you guys can also check out the ticker. We're going to check out the ticker and the chart in a little bit here before we bring them on. But of course, like we always do, we're going to get into our headlines of the day today. So let's go ahead and let's take us back to those headlines. All right, guys. All right. First up, we got NVVE here. That's going to be new, highlighted in Electric's new transportation as a service model. The V2G hub model will utilize renewable energy and bi-directional charging to help grid resiliency. They also launched successful V2G projects on 5 continents and is developing partnerships with utilities, automakers, and electric vehicle fleets worldwide. Another one next up would be VIH. That actually had some partnership talk. So back partnership with Cantaloupe to accept cryptocurrency as a participating loyalty point. So cryptocurrency play there in VIH there. So definitely check that out, guys. That's going to be cryptocurrency and making some moves. All right, let's go ahead and let's get into the next one. That's going to be Desktop Metals, guys. Desktop Metals, DM, ticker DM. Desktop Metals announced the launch of Wood 3D printing tool, Forust. Founded in 2019, the company specializes in 3D printing and interior design. The company's non-destructive printing methods have managed to largely fly under the radar with minimal press coverage until now. So definitely check it out, guys. One of the things that I'm focusing on is, do we get the 3D run again? I've been focusing on DM, but also you could see kind of triple D and maybe even a different one start making a move. We'll definitely keep an eye on them as they've been near their support. And so we'll see if they can bounce off that and start moving. Next up, we got Genie. Genie, you guys know, one of my favorites, acquiring Second Spectrum, a video analytics platform for $200 million. Second Spectrum works with the NBA, EPL, and MLS. The deal would include cash and stock, and investors in Second Spectrum, including the Clippers owner, Steve Ballmer, turns video into data and could give Genius new technology capabilities and new clients. So as you guys see, Genius's growth has already been looking great, and they're getting more deals, looking into some new technology here that could turn that video into that data, and they could go ahead and monetize that data. One of the things that they did do is it's augmented reality experiences from basketball and soccer. So definitely look out to see what Genie can do with Second Spectrum. All right, guys, let's keep going. Next up, MP earnings Thursday, after hours, Q1. Let's go ahead and take a look. Revenues grew here 189% here year over year at $60 million. The net income increased to 737% year over year to $16.1 million, and adjusted EBITDA grew 537% year over year. And this is going to be interesting. I mean, a little bit later, we're going to be going into battery recycling, but we're talking about a lithium player here. And as you can see, the revenue is definitely growing year over year. So it's something to definitely keep an eye out. One of the things that is was stated was stage 2 optimization plan is on track, and we're making steady progress on our stage 3 vision. So definitely keep your eyes on MP today. We'll see if it gets a bounce. Right now, it's looking like it's taking a little bit of a hit, but we'll see if it gets that bounce. Next up, DKNG, Q1 earnings today. First quarter revenue of $312 million for DraftKings and was up 175% year over year from the pro forma. One of the things that was stated was that DraftKings had a 1.5 million monthly unique payers, up to 114% year over year in the first quarter. The average revenue per monthly user payer was $61, which was up 41% in the increase. And in the first quarter, DraftKings launched sports bettings and iGaming in Michigan and launched sports betting also in Virginia. So definitely keep your eyes out on the sports betting market. We also saw some great numbers from Penn. So let's see if when these can catch a bid. We're seeing DraftKings back down towards 50. Of course, it would definitely look attractive to me near that $40 price point. So we'll see if it comes back down towards that level, and we can try to get a bottoming on the sports market. Next up, NGA. NGA will begin trading as LEV, and that begins today, guys. That's from Lion Electric. It's official, guys. So LEV will begin today. SPACs to watch, FSRV on Wayfair support, bringing Catapult public. So definitely keep your eyes on that one. Movers PCT hammered on short report from Hindenburg, calling it the latest zero revenue SPAC charade, sponsored by the worst of Wall Street. So definitely some bad publicity there for PCT. So keep your eyes on that. For our merger vote calendar, guys, of course, keep your eyes. We just talked about a couple of these, but coming up on 5/10, you got lots. You got also on that same date, you got UWMC, you got SPCE, and then a day after, you're going to have HYLN, Helion, and then going into the next week, 5/13 FOA, and of course CLOV, the Clove, is going to be coming out on the 17th, guys. So that's going to do it for our headlines of the day. As you guys can see, I'm not as good as Chrisopedia, but I'm definitely going to stick in there and stick in the battle with you guys today. So if you guys could do me a favor, hit the share button, let everybody know PDIC is coming up next, and I want to get a lot of people in here. Hit the like. Let's get over 150 likes by the time we get this interview started. And like always, guys, we're going to keep going up, because at the end of the day, we're going to bring you all the information that you need to be the informed trader. All right, traders. All right. I'm back. Let's get that rocket keep moving to the moon, like they all say in the social world right now. So up next, guys, we're going to be getting into our interview. But before we get into our interview, I wanted to hear in the chat. So definitely put a 1 if you're bullish on PDAC and you like the battery industry. Put a 2 if you're looking to see how this company develops in the next couple of years, so that you can be an investor also. So definitely let's go ahead and I'll check out those numbers. I want to see them start rolling through there. Everybody, let's hit the like. Let's get this party started. You guys already know there's some ones. I see you guys. Let's get this started. Let's get into our interview. I'm going to go ahead and bring on LiCycle here. Of course, guys, this is going public via the SPAC merger. The ticker is going to be PDAC. Let me go ahead and put that banner up here for you guys. Doing the show all by myself today. Here you go. All right, let's go ahead and let's get into our interview of the day. First up, I'm going to bring Ajay, Kochhar, the president and CEO of LiCycle, also co-founder, and also Tim Johnston, co-founder and executive chairman of LiCycle. Let's go ahead and bring them on here. How we doing, guys? Welcome to the show.
Hey, Mitch. Thanks for having us.
Doing well. Thanks for having us on.
You guys have been behind me since the beginning, so I feel like you guys are already with me. But let's go ahead and let's get into our interview today. Of course. First up, we got the co-founder and president. How we doing it, Ajay? One of the things that I wanted to get into, of course, the first thing is first. We always ask the question, why a SPAC deal? It's one of the most important questions. So why did you guys go public via SPAC?
Yeah, let me start and then Tim should add on. I mean, look, we're a commercial business, lithium-ion battery recycler. Think the smallest battery you can to mobile phones all the way up to electric vehicles. Have been 5 years in the making. And we're going to get into the technology, I'm sure, but it's a two-phase model. We're a non-thermal recycler. And Tim and I both were engineers. We come from a technical background and the lithium industry. So, just to the question, and we're going to get through a lot more detail, but, we have two parts to our business model, spoke and hub. That's how we take in any type of battery, go to intermediate product, and then to refine battery grade material. So we already have two spokes up and running commercial today. The hub part of what we do, which is the real production of battery grade lithium, nickel, cobalt, we've been developing that for our whole history, essentially, as a company. But as the industry has continued to scale rapidly, there's a lot more batteries now that need to be recycled, even from sources like manufacturing scrap, which I'm sure we're going to talk about. So when you make a battery, it's not perfect. It generates a level of production waste or scrap. So we need to continue to scale. And last year with our board, we were looking at a variety of ways to see this plan through, and particularly the hub facility also that we're building in Rochester. So we looked at a variety of options. We had a bunch of options available to the company, but we wanted an efficient method to fully fund our base case business plan. So that's what led us down the SPAC route. We made that decision, went methodically with our advisor, Citi, who we selected, from a broader range, and basically looked to find the right partner. And that's the key thing here. We really wanted to find the right partner. I mean, there's a transaction steps, which, we wanted certainty of how we would move through that. But also importantly, this is just the top of the first inning of this industry, right? So we wanted a partner that would join the board, shared the vision, and really helping us gear up here for additional scale and additional growth. And I don't know, Tim, if you want to add on to that from your perspective.
Yeah, no, that's spot on, Ajay. The key thing for us was capital is great. Capital helps us grow the business, helps us achieve the targets of what we need to deliver for our clients and customers. But having that experienced management team from the Peridot side join the board really adds a lot of value and depth to our board capacity and us as an organization as we continue to grow the business.
All right. So one thing that I'm going to get into here, and, I really see it, as you guys state here, the three core themes of your business. What are these themes, and how has the pandemic helped or hurt this trend? And I'll go first to Ajay, and then I'll go to Tim.
Yeah, sounds good, Mitch. Yeah, so look, I think it's interesting. Our business is at the core of these three key mega trends, right? And usually a company might sit in one regard. So the three are, to be clear, you see at the top, electric vehicle, true demand revolution, and even more broadly, I would say even just applications of lithium-ion batteries, right? Think about you in your everyday life around you now. You could probably count 5 to 10 in your house, things that are powered by lithium-ion batteries, just even beyond electric vehicles. So that's one key driver. As well, we're a circular economy business. So we're ESG driven. That's more than just the acronyms. We have to believe in that and actually lead with that. And also there's been this huge focus now, and Tim and I have been in this industry for a long time, so it's always been prevalent in our minds, but I think the world is waking up to the bottlenecks that will exist around critical materials, right? Lithium, nickel, cobalt, these are finite materials that need to be in a very specific form to go into a battery. And we sit at the center of all of that. And back to the question, Mitch, about the pandemic, I think it's been interesting for our business. I would say, pandemic aside, our world is definitely in a time, and we see our key customers accelerating aggressively. And that is a big difference. 5 years ago, when Tim and I started this business, we would get told, hey guys, what are you doing? Aren't electric vehicles 10 years away, and hence aren't EV batteries need to be recycled even farther? But one, we knew it takes time to develop these things, and coming from that background. But two, it misses the point, what I was mentioning briefly around things like manufacturing scrap. In the world today, there are 200 mega factories plus to make batteries. When we started the business, that number was just over 10. So despite the pandemic, that continues to accelerate, and all those facilities have a level of manufacturing rejects or waste that needs to be recycled before the tsunami of end-of-life batteries. So back to the question, we just continue to grow at an accelerating pace. And the transaction platform is helpful because it ensures that we can see through our obligations to our customers.
Yeah, that's exactly right, Ajay. And just, one other thing just to add on to that is that keep in mind, we built 2 new plants during 2020. When the world was receding back, we were actually growing. And that was driven by the industry pull. We didn't really get an opportunity to pull back at all. We had to grow with our customers. And what we're seeing is they continue to drag us and pull us into this space and grow at a really rapid pace.
Yeah, so one of the things that is mentioned in the investor presentation is that you guys will be getting into profitability. And so one of the things that I did see is that expected cash flow positive and net capital expenditures by 2024. How will the team at LiCycle really accomplish this? And I'll go first to you, AJ.
Maybe I'll kick it over to Tim. Tim, do you want to go?
All right, let's do it. Let's do
it. No worries, guys. So
how are we getting that positive?
we get positive through the combination of what we developed as a technology, but also how our approach to the business plan works. As Ajay was alluding to at the start, we have 2 parts to our process. We have our SPAC operations, which is where we receive lithium-ion batteries and battery scrap material from the industry, end-of-life batteries, and we process them through to intermediate materials. That process in itself is a very valuable piece to the key to how you extract value out of lithium-ion batteries. These facilities are designed to be zero liquid discharge, which means we generate no wastewater. We have no thermal processing, so we have no meaningful air emissions. But they're also built in this modular fashion. In fact, we have a facility in Canada that starting next month, that's all they'll be doing is building these facilities because they're designed to be rolled out to be positioned close to where batteries are located. Trying to build the number of assets that we've set out to do, which is 20 spokes and 4 hubs over the next 5 years, would not be possible if we had to reinvent the wheel every single time that we need to build a new facility in. And so just like a cookie cutter process, we have that ability to roll those out very, very efficiently, low capital, easy way to deploy and scale quickly. The other part of it is on the hub side of it. The hub really unlocks that value. So now we have a multitude of spokes around the world in North America and elsewhere, whereby they'll be producing this black mass material, which is an intermediate material. That's a very boring word in terms of black mass. What it is the anode and cathode materials in the battery. That's where all your critical materials, nickel, cobalt, lithium, they all reside within that black mass material. We then have the ability to then process that material back into those key materials that go back into the battery industry. And that's a key unlocking step because traditionally, batteries were being treated as a waste. A lot of that material is being burnt off, recoveries were low, costs were high. So it was a relatively inefficient way to get those materials back into the supply chain. With our technology, we've developed this bespoke process that efficiently converts it back into useful materials. And so with that process, that's how we can really unlock the value that gets us to the cash flow positive position in towards 2024.
All right. Now, of course, when we talk about recycling batteries, this is not new technology. But one thing that I do see is that you guys do have a competitive advantage here. I see the 95% recycling efficiency rate, but what other features or results show that LiCycle is the leader in this industry?
Yeah, maybe I'll start, Ajay, but feel free to jump in. The key difference between where the industry was when we came in 5 years ago, batteries are being treated as waste, which just basically means, like most hazardous materials, they would end up in a furnace somewhere where they're burning off plastics and electrolytes and generating a whole lot of waste and emissions. But that's also a pretty inefficient process. It consumes a lot of energy. It's expensive, a whole range of different things. Well, with Ajay and I's background in battery technology and the production of chemicals, we looked at this and we said, well, there's actually a better way that we can do this. We can mechanically break down the batteries and generate that material, that intermediate black mass material, without burning off the electrolytes and the plastics and everything else. We can return more material to the economy, which allows us to push towards that 95% recycling efficiency rate. But the other benefit was actually on the economic side. We always had a vision that we are not just an ESG company. Yes, that is a very important part of who we are, but we're also a business. And as part of that business, our goal is to extract as much value as possible from that lithium-ion battery. And with that spoken hub technology, that allows us to recover the most amount of material, generates the most amount of revenue. And because we're doing it in a way that is fit for purpose for the material that we're processing, i.e. lithium-ion batteries, then we're able to do it at the lowest possible cost. So you combine all those things and it gives us a real structural advantage that's not just economically advantaged, but now it's also environmentally, sustainably advantaged against the traditional industry.
Yeah, just
Ajay, anything to add?
Yeah, I was going to say just from the highest level, like our moat. So what Tim just described is really the technology, the economics of that. And that's taken time to develop, and it's not easy, and it's patented and protected, and that's a key part of our moat, right? So that's one pillar, if you will. The second pillar is commercial, right? So it's not like somebody can just set up. I mean, you could try and say, okay, hey, we're recycling batteries, send us your batteries. The way that this works is we have commercial. This is the second part of the moat, the in and the out. So alongside our development the past years, obviously we've been commercial for a period of time here, we've brought the customers along with us. So these are the largest electric vehicle manufacturers, the largest battery manufacturers, groups that aggregate and sort these types of batteries like consumer electronics, right? So as we were developing, we had to go through qualification with those groups. What does that mean? What we would do is initially, a lot of these companies need to do compliance checks. They need to make sure that we're of a certain standard. It's a minimum bar, but a high bar. Then we've had to go through traditionally, this is a couple of years ago, what we call an evaluation program. So we would take, say, one pack from an electric vehicle and recycle it through our process to then demonstrate that, okay, we say we can do X, Y, Z, but let's show we can do what we say we do. So that was both a business development, but also an important qualification step. Then we would go to first-time commercial agreements. You're still following me. And then it would culminate in a master services agreement, which is where we are today. And that MSA is an umbrella agreement where we serve these companies to take their batteries and recycle those materials. Now, why do I make that point? It's sticky, right? So these are 3 to 5 year plus contracts. They have a variety of terms, and it varies. Sometimes we're getting paid. Sometimes if the material is a lot of value, we might pay. But that's really, really important alongside our ability to make the end product, the lithium, the nickel, the cobalt, and more. And we've also qualified that. And if folks saw the investor presentation, we have a partner there named Traxys. Traxys is the largest independent nickel cobalt trader globally, part owned by Carlyle. So that's really key, right? You can have great technology and patents and everything, but if you don't also have the ability to monetize that with the in and the out, you need all these pillars, and that's part of our moat. Really important aspect.
Of course, it sounds like you guys also take in one of our core values here at Benzinga, which is we say what we do and do what we say. So that's definitely part of our core values, and we live by it. Now, one of the things that I have a question on is, does a rise in commodity price affect your business? So I'll go to Tim.
Yeah, no, absolutely. I mean, we have contracted offtake for our downstream products. We have exposure to the commodity price, which is a benefit for us. We've taken a very conservative forecast. When you look at our presentation, our 8K, you'll see that we take the lower of the industry benchmarks, which would be the New York consensus benchmark. If you compare that to today's prices are significantly higher than that. And so from our perspective, we see it as a significant upside potential as the demand for these materials grow. Price pressure is created because, let's face it, there's limited new supply that's coming online. It's new supply that takes a long time to materialize. And as a result, we benefit from that discrepancy between the supply and demand and that upward pressure on pricing.
All right. So what I want to get into now, and I pulled up the slide here, is so now, and it states here, 75% of today's cobalt is sourced in Congo, where non-negligible portion of it is a supply that's tied to child labor, and you guys have a great quote here by the great, Elon Musk here, asking for efficiency and obviously environmentally friendly nickel mining at high volume. And the Tesla will hand out giant contracts for a long period of time if someone could actually do this in an efficient and environmentally sensitive way. How can LiCycle really step in here and help this process?
Yeah, maybe I'll start and then Ajay jump in. And it comes back to two parts. Our technology allows us to produce these metals cheaper than what you can mine them for, which is a really interesting dynamic. A lot of people think of recycling as being a higher cost way of producing these important materials, but in reality, it's actually a lower cost way to produce these materials. When we complete our hub in Rochester, we will be the largest domestic producer of nickel in the United States. So it's a interesting perspective in terms of how do you domesticate supply of these critical materials, even if you're limited in natural resources. And so as we sort of look at that model going forward, we have that economic advantage, we have that domestic supply advantage, and now we also have that environmental advantage, the transparency that's given by knowing where the materials are coming from. The fact that they're not being mined is a significant advantage, and then being able to extract that value and return it back to the industry.
Yeah, I mean, in our world today, this is like just, big picture, right? Where you see these curves, right? I think everyone knows where the world's going. And this is like happening, right? Like when Tim and I were first starting out of this industry, there was a lot of questions around electric vehicles, right? I think it was still unclear if this would happen. But when we left our past careers in 2016 to, launch LiCycle, we knew it was happening, and we were on this kind of wave. And we can tell you firmly now from our customers and what's happening and the way they're growing, this is happening. So that means now that those demand curves that you see, that's unfolding. Now, the latent tension here is you can't just snap your fingers and turn on lithium supply from mining. And as you pointed out, Mitch, there's other really sticky and unfortunate topics from an ESG perspective with some of these materials like cobalt. So big picture, right? We need all these materials. We need to get it in a clean way out of natural resources. But then when it's above ground, we can't lose it, right? That becomes the urban mine. That becomes the source of where we need to continue to recapture those materials and bring it back into new batteries. And this is the really interesting place we find ourselves in the world today. Every country, every region is trying to get a domestic supply chain. And how are you going to get a domestic supply chain if you can't change the geology in your country? It is what it is. So what's the best next resource that you can tap into? It's the above ground resource. And that's where we see this going in the world. So it becomes partly a geopolitical issue. But, and I think the other last thing I wanted to highlight, and this is the other thing we've noticed in the industry, just really big picture. When we started the company, there would be a lot of skepticism around, you see these materials on the screen there, like recycled nickel and lithium. And people say, as Tim said, oh, well, it must be lower quality, or, oh, it must be higher price or something. And, what we've had to do is develop, prove, commercialize, and actually do this. And I'd say it's flipped now. In the world, there's actually a huge desire, as Tim was highlighting, for transparent, recycled, better ESG profile metals and materials. So we find ourselves in between these forces in a great way, but it's really accelerating. I'd say 2020, 2021 has been a very fast-paced time in our industry, and it will continue into the near term.
Well, I appreciate that you guys are taking it in a kind of substantial approach and really approaching it in that matter and keeping it in mind that this could potentially affect your company. One of the things that I wanted to talk about here is going into the next. And, one of the things that I've seen is that a lot of investors have been really all on EV vehicles, right? And so a lot of it is thinking about the manufacturing scrap and auto OEMs here. And so you can see the big names there. But what I wanted to talk about is also that it's not only in kind of these autos, right? There's different areas and different supply of batteries that you guys are going to be targeting for this recycling. Can you explain me the other kind of areas? And of course, you can touch on auto. We'll go first to Tim.
Yeah, absolutely. I mean, when we look at it, we're really a industry or a company that is a little bit analogous to the application. We're benefited by the growth on the EV side, but the reality is that lithium-ion batteries have been in our lives since the early 90s. And as we've all gone more and more mobile, we've moved more and more towards lithium-ion batteries. And as Ajay said at the start of the presentation, we all are surrounded by them. And so when we look at the breakdown of material that we get, we were able to grow initially heavily with consumer materials or small format batteries, laptop batteries, cell phone batteries, those materials. But now we're benefiting from that growth on the EV side. What the EV industry is doing is pushing through that manufacturing scrap. It's pushing through end-of-life material, warranty material. But there's also been another really interesting dynamic that's happened in the last decade, and that is on energy storage. One of the things that I'm sure many of the people watching today will be familiar with is that the world has moved and continues to move towards more and more sustainable energy, green energy. And a lot of these sources like solar and wind are intermediate producers of power. And so they typically, in a lot of places, use some form of energy storage to supplement when the sun's not shining and the wind's not blowing, that power generation. And what we're seeing now and have seen over the last number of years is because of the advancements in the lithium-ion battery industry, those energy storage systems are largely moving towards lithium-ion battery based. And of course, like any asset, they have to be retooled periodically. There's a need to then process all those materials that were there being used for a period of time. And that's where LiCycle comes into it. So it's not just one sector that we're exposed to. We're really, right across the full spectrum of application of what's happening in our world today.
Yeah, I'm always like, by the way, I'm like a softer note, like Tim and I together is the team here is basically, and we work together for a long time. So Tim and his kind of side of the business that he helps to lead is really the operations and technical side. And we have a great CTO and a very strong technical team. And I'm really plugged in on the commercial side. So like I was going to say there, Tim is often at our operations travel buddy as I help to do these things, sometimes stationary. But what I was going to say was if you were to sit in our operations and just look at the things that are coming on the conveyor belt, like batteries are in everything. Everything. Think lawnmowers, think household appliances. I mean, Tim, I don't know what the craziest thing we've seen, but I mean,
it's fighter jet batteries, satellite batteries, like, everything and everything in between, right? So it is true. It is, and it's one of the interesting things, and that's one of the key aspects of our technology was we had to be ambivalent to all these different types of feed. We wanted to make sure that it didn't matter if it was a cell phone battery or an EV battery or a battery that had been to space. It didn't matter. We were able to process all those batteries through our process. And but they are everywhere. Everywhere we look, there's lithium-ion batteries today.
Definitely. I think this is perfect segue into my next question here about the regional presence and global footprint and how you guys are going to get towards your 5-year rollout. I would love to hear how we're going to get there, but also how the regional spokes actually help the battery transport, the cost here. Explain this. Who wants to go first?
Sure, I'll start here, and then Ajay, you jump in on I'll explain how it works, and then after you talk about the business side. And so from the benefit of a spoke is that what we want to be able to do is minimize the distance that we have to transport a battery to somewhere that we can process it safely and turn it into a high value intermediate material. That's what the spoke does. And because when you think about it, the valuable materials in a battery only make up a certain portion of a battery, but also batteries have their own hazards associated with transportation. We've all seen some of the issues within the industry over the last decade. So minimizing that distance that we have to transport the batteries significantly reduces the cost. You can only do that if you have a process like LiCycle's process that meets those key environmental components we were talking about, i.e. no thermal processing. Nobody wants a smelter or a kiln or something that's burning off and generating hazardous air emissions close to where they live. Just nobody wants that. And so in order to get the batteries close and get the processing close to where those batteries are, you have to have a process that is able to be deployed close to where population centers are, because ultimately that's where batteries are. And so that's how we're able to get the battery cost down, to get it into our plant. Once we have that intermediate material, these intermediate materials, they're commoditized. They are in what we call super sacks. These are 1-ton bags that sit on a pallet, super easy to transport, high value intermediate materials. We sell the byproducts, the metallic foils, low density plastics into the local markets. and then we take that high value black mass material that we were talking about earlier, and then we move it to a centralized facility because that's a much easier product to move. It's much higher value. We reduce a lot of weight, and we benefit from the economies of scale associated with having a large central processing facility to convert that black mass back into battery chemicals. And so, how are we going to grow and roll out across the world? Well, Ajay, why don't you sort of talk about our growth plan across there?
Mitch, if you want to pull up the map, I can speak to that. So that's the predication of how we've scaled. So how do we get to scale? The spoke and hub model is super key to that, and then the technology that is the key differentiator. Okay, great. So you see this map here. So where we are right now, North America, we have the 2 spokes, right? We have one in Kingston, Ontario, Canada. We have a second in Rochester, New York, and we've made the announcement about the 3rd in Arizona. So the 3 top spokes you see there are spoken for and clear. And the hub you see there below, that's the one that's also going to be in Rochester. By the way, why Rochester? Former Eastman, or it is Eastman Business Park. It's a former Kodak Business Park. Great chemical infrastructure, very good for that centralized operation. We did a very rigorous site selection before we went there. So that's how we're seeing through the plan in North America. Now, ex-North America, we have a 3-pronged strategy. First, we are growing in some cases organically because we have some vehicle OEM customers, battery manufacturer customers that are global. And they say, hey, LiCycle, you're helping us in North America or here. Can you help us over in region B? So that's organic. The second way that we are growing, and this is going to be the main mode for a lot of these jurisdictions, is regional joint ventures. So as Tim was talking about, batteries are everywhere. The spoke model is great to deploy to get close to where batteries are. And so we're working with partners. We have team on the ground between Hong Kong, Korea, Japan, China. We have boots on the ground, team in Europe as well. And we're really developing with partners that have the need, right? So we want to partner with groups that have the need for batteries to be recycled. So these could be battery manufacturing companies, they could be waste management companies, they could be auto recycling companies, right? There's various participants in the supply chain. And we can deliver our technology, the spoke technology, for example. And what we want, frankly, is then ultimately the black mass, right? Because we're trying to deploy this network to really get access to that material. And then lastly, judiciously, and this will be case by case, opportunistic and lower level, but sometimes we see opportunities, and this transaction will give us that platform where, hey, there's a regional player, they have people, supply, permits, but they lack the technology because maybe they're a more regional business. And so that's an opportunity potentially for some buy-side M&A. And that's a third way that we're going to be rolling out these facilities. So what I'll say here is stay tuned as we do our quarterly updates. Once we're public, this will be a key point that we'll keep updating against. And what you'll see is definition around each of these facilities saying, hey, where are we going? Who are we doing it with? When is it going to be as part of the 5-year plan? And that's some of the catalysts to come.
Yeah, so what I want to get into now is, of course, we've been seeing heightened battery regulation and infrastructure spending. And I know we've seen Biden's administration making a $2 trillion investment in infrastructure and clean energy. How will LiCycle lead the way, not only in maybe California here, but also in the whole United States?
Yeah,
Ajay, I'll let you go.
Yeah, big plan, obviously now going through the House. Part of that $174 billion towards EVs, I think a lot of the viewers must have seen that. Within that, there's $12.5 billion allocated or proposed towards battery manufacturing. So there's been, I will say, the refreshing thing here has been the sense of urgency. I think a lot of us in industry have gotten a little worried about the lack of movement in the US, in North America more broadly around battery supply chain and EVs. And so that urgency, it's woken up. And I think it's great to see a really aggressive plan behind that. What's the role that we can play? Multifold. First, you're seeing now probably more battery manufacturing capacity that folks might notice in North America. Even some years ago, wasn't quite clear, but it's now starting to really shape up better, I would say. It's still a ways to go, but shaping up better. So all that battery manufacturing comes with scrap, and I'll leave it at that. That's basically, a source of feed for us, and just stay tuned on that front. The second thing that really then how do we play into that is also the critical materials. As Tim said, our hub facility in Rochester, New York, this is very momentous from a critical material supply standpoint. biggest producer of cobalt. So there's other cobalt deposits in the US that are, mining deposits, but they're not yet producing. So this will be the only producing source of a battery grade cobalt product in a large scale. Second, on the lithium and the nickel, top 1 or 2 for each. And that's from a recycled source. So now we come back to this whole supply chain policy focus on this whole ecosystem. This is a very critical part, right? You can't build the supply chain if you don't have the fundamental materials that you need to make this all happen. So it's very central here. Recycling is really coming up on the radar, which is great to see from a policy standpoint. But we have to keep pushing because we're just getting started here in many ways.
Definitely. One of the things that we've been seeing is to push the carbon neutral. And I think that's going to definitely help bring that recycling growth. What can you guys tell me? Do you guys see this trend kicking off a little bit faster than what's been predicted? Some have been saying into 2050 for the United States. I'm starting to see kind of a faster trend pace. I could put it out there. I think we could be at least 10 years faster than that. What do you guys think on your side?
Yeah, I totally agree. Yeah, no, absolutely. It's one of the things that continues to impress us with this industry is the pace. I feel like every time we kind of set the bar on our expectations on what's going to happen in the industry pushes past it. And that ability to supply materials, I'll give you a couple of key points. For example, for every ton of batteries that we recycle, we offset 5 tons of CO2 emissions. For every ton of lithium-ion batteries we process, we offset something like 97 tons of water. So it's a massive opportunity to support green electrification of our transport industry, of our power systems, and support everyday life by ensuring that at the same time we're doing the best thing by the environment. And of course, that goes hand in hand, and this is the benefit with LiCycle. It is truly synergistic with the ability to generate an economic return, which is a sometimes rare aspect of this industry.
Yeah, clean capitalism, right? I think some people might think that, we get this question actually a lot. People say, well, if there's thermal processing and it's dirtier and they burn stuff up a stack, it must be cheaper or better up, economically. Mm-hmm. It actually isn't. Mm-hmm. That's the really interesting thing about it. That's why we've gone down this path is when you take that path just commercially, economically, like you're burning off, say, graphite and plastics, electrolyte, and then they often lose lithium into a solid waste stream. So you don't get as much recoverable revenue. The costs are higher. So the unit EBITDA, I'm just talking purely financial now, the unit EBITDA is not as great. So via what we're doing, you don't burn things off. You get more recoverable revenue at a lower cost, fit for purpose process, and hence it's more sustainable from an economic standpoint. But to Tim's point, they're both hand in hand. And I think sometimes people think the dirtier process must be cheaper. No, actually in this case, they're together. And that's the unique opportunity here. And I think it bodes well for the true long-term sustainability of the business.
Definitely, guys. So one of the things, and you guys have mentioned it before, is the Rochester hub, right? And I love how you guys have really gotten significant support here and also local support. You guys are supporting jobs here, which is something that we definitely need in the country right now. And then also what I like to focus on is how this is really going to help us with that U.S. Lithium. It's really in high demand. Can you guys explain to us what's going on really at this Rochester hub and how you guys are going to help us here in the United States?
Yeah, absolutely. I mean, this is going to be the hub for North America, whereby we're going to bring black mass material, that intermediate material from batteries from all over North America, and even the ability to import materials as required. And from that, we're going to generate and be a significant generator of those key battery materials to go back into the supply chain. Rochester is fantastic. I mean, it's well set up from an infrastructure perspective. We've got things like road and rail and power, steam, the things that we really need to do the work. But the other part of it is that we also set up with great people. We already have an existing operation in Rochester. We've generated approximately 30 full-time jobs during the pandemic just in Rochester in the lead up to this. I mean, this is a great opportunity for the region, but just not only just the region, it is a great opportunity for the country as a whole.
Definitely. So let's get into the last kind of question here, and then I'll have one more just to kind of put it out there for all the investors. But of course, one of the things that we've been seeing is we've been seeing SPACs really start being focused on more of this growth and margin profile. So that's why I'm going to go ahead and bring into the financials here. And what I want to focus on is really that margin at 48%. I mean, this really stands out to me because if you could see on this chart right here, you can also see lithium producers here at 29%. Tell me how you guys are able to really achieve this margin and at such a high rate.
Yeah, I'll start and maybe Tim can add on. And there's actually a really common question. People say, well, how do you get to that sort of margin? Well, let me explain it. So what we're getting in a battery, lithium-ion battery, this is the culmination of a very complicated supply chain, refined material, and it's very valuable, right? So the actual recoverable revenue per ton of batteries weighted average is over $5,000 a ton, roughly speaking. So that becomes our kind of, in our business model, we're shifting this industry to be focused on the material recovery, right? So the material recovery, sale of the material, and go back to the economy. So because we've, on the front end, you think about it, okay, very rich material coming in, low cost process, fit for purpose, we get up the materials, we go to the same grade of an output product, the same as a mine, right? So you get to that point and we've optimized costs because we've specifically developed technology for this. So that's what enables, just in terms of the cost profile and the driver, the low cost input. Then on the outside, okay, when we make a lithium carbonate or cobalt sulfate or nickel sulfate, well, the recycling industry doesn't determine the price. The price of those materials is determined by the mining industry because that's the bulk of the supply in the market today and for the next 5-10 years. And the price that is dictated therein is that of the lowest cost, or the highest cost or marginal producer on the cost curve, right? And that cost structure is totally different than ours, right? They're digging up material from the ground, refining it, right? And lastly, when you compare to the lithium converter margins, we don't just have lithium, we have a portfolio of products, right? Everything that's in the battery, cobalt, nickel are also key drivers. So that's it, right? We're taking a high grade material, going back to things that are equivalent to mining, selling at the price dictated by that, and with fit for purpose technology to low cost that drives a high margin. And we've been super conservative. We maybe we're a little different in that way from I don't know others that are in the space, but we're conservative forecasters. We like to put out numbers that, as you said, do what we're saying we're going to do is really a mantra here and a value at LiCycle. And that's the lens that we apply to the forecasting and our business model as a whole.
All right, guys. So the last question I'm going to have for you, and then I have just one from the chat today. I love to go to one at least from the chat. So my last question is for all the investors out there for LiCycle. What's next, and where should they be focusing on to kind of stay with your company?
Yeah, maybe I can start and Tim should add on. Look, so in terms of upcoming catalysts, I would break it into three. The first is commercial. So we continue to do work with battery supply. We've obviously publicized the Traxys partnership. So just keep an eye out for that. The second is on the facility development. So we put out the announcement around Arizona. There's more to come around other facilities in that regard. And the third is on the international side. So this is now in the coming quarters. We have a whole bunch of things going on that will convert, as they do. And that's something to keep an update against. That map that we showed, where those spokes going to be, where the hub's going to be, with who, how. So those are the three things I'd point to. And I don't know, Tim, if you want to add on to that as well.
Yeah, no, I think the other thing is that the transaction's very much on track, that we're working aggressively towards the completion of all the softer sides of getting that done, and really looking forward to having the Peridot team on board fully. So I think that's the other key thing to keep an eye out over the coming weeks.
Yeah, that's the nearest term. Exactly.
Yeah, of course, out there, they all want the date, but we'll get into the question here. John Doe asking, what do they do with the battery housing after recycling the rare earths? So the housing for the battery, what happens after that? Maybe Tim can break this down.
Yeah, not a problem. So the housing itself is mostly metallic, usually aluminum or steel. There's some copper bus bars associated with that. So we actually, because we're focusing specifically on the battery materials, so we actually partner with traditional aluminum, steel, copper recycling companies, that then process that material through the traditional scrap metal waste funds. The value that LiCycle is really adding is really around the critical materials within the battery. The housing goes off for secondary recycling.
All right. Well, you guys heard it here first, guys. So this is LiCycle definitely going public with the SPAC merger. Ticker is PDAC. Thank you guys for joining me. Ajay, Kochhar, the president, co-founder, and CEO of LiCycle, and also Tim Johnston. Thank you guys. I'll get you guys back. I need to bring my Kirsopedia back, really the brains to this show. So we'll definitely have you back on our show soon.
Looking forward to it. Thanks for having us, Mitch. It's a pleasure. Looking forward to keep everyone updated as we move
Pleasure. Thank you, guys. All right, guys. As you guys heard it first, again on SPAC's attack, give me a thumbs up if you appreciated me rolling through there, trying to do the best I could on that interview and get you guys the information, because that's what it's all about, right? I mean, at the end of the day, it's not for me to go ahead and do this information. It's for you guys out there to do the best and get the most informed interview. Let me know in the chat what you guys thought and what you think, Spencer. I mean, you're back there.
Yeah, I was listening the whole time. I was in the background. I thought it was great, and I've come to realize something, in the past couple of days or week, and let me tell you why I love these interviews. First of all, that was a long interview. They gave us a lot of time, so we appreciate that. This is why I love these long interviews, especially on this show. Okay, you take a stock like PDAC. Okay, it's $10, so you're basically back to square one. From a stock standpoint, from an investing standpoint, you're back to square one in the stock. It's $10. And a lot of them are back to square one, right? A lot of these SPACs. So now it's a question of, okay, we can all kind of agree that there's not a lot of premium baked in. So now it's a question of the fundamentals. Now it's a question of, forget story. Story's out of favor. They're all out of favor. Forget that. Now it's a question of the business, the execution, the leadership, and who's going to succeed. And we don't know that. But the only thing we can do in the meantime is try to learn. And one of the ways you learn is by hearing directly from the leadership team, from the CEO, from the president, from the founders, right? So and that's where we're at right now in SPACs. Is it's everybody's sort of back to square one, and it's time to try to figure out who the winners are going to be. And yeah, as the chat was saying, there's a lot of competition, right? These guys aren't alone. And it's a question of who's going to be the winner, and we don't know that. But now is the time to place your time to place your bets, right? The time to place your bets was not 3 months ago, right? It was not when every SPAC went up no matter what. It's now.
Yeah,
now was the time to do that.
Mm-hmm. So it's like going like we love our Joel Khan and on pre-market prep, like going to the horse race, right? You get all the horses, you get their track meets, you get their background, you get the races that they've been in, but you don't know exactly how they're going to perform in this race. This race being the stock market here, guys. So one of the things that I definitely say is pay attention to kind of the growth of each company and how they actually meet the demands or the revenue that's stating on their investor presentation. See the earnings, see how everything's going. And one of the things that we're going to do is I always say diversify. You can't just pick one winner in each industry and expect yourself to be at let's say 100% accuracy. So what I would say definitely is start learning how can I diversify in a long-term investment portfolio towards SPACs. I think this is definitely going to give you a beneficial factor. Over the time, there will be some winners, but there will also be some losers, like Spencer's mentioning. I think we all know this now. And the important part is staying and giving yourself a diverse approach so that you don't get caught into just one stock, and the next thing you know, you become the bag holder and your only play. And that's what I definitely want to keep people safe out there. But from the interview, guys, one of the things that I could definitely say is that I do like how they have a global approach and trying to help each region out with the needs that they need. Yeah. This is important because at the end of the day, this is not just a United States need or demand. This is a global need. And I think as they attack that global need, that's what can give them even some drivers that are outside of the United States to really keep this stock moving.
Yeah, and again, it's going to come down to execution. A lot of these stocks are, frankly, in most SPACs, almost all of them, I would say, are in sexy industries with easy to tell growth stories, demographic plays, global technological shifts. But it's going to come down to execution. And I like how SPAC Broker just put it, right? They're more valuable now with the SPACs trading at their NAV, at their $10 bogey price. They're more valuable now than ever. And so now is the time, and we're going to keep doing this because these kind of interviews are the closest thing that we're going to get to knowing a lot of things. And especially with these SPACs that aren't even complete yet. I don't even know if we have access to balance sheets and financial statements right now for a company like this, right? So these interviews are super valuable. Obviously, what they said about being global, it sounds great. It all sounds great. Everything sounds great. That's the catch, right? Everything sounds great. Investor presentations are designed to make you bullish, right? So of course it sounds good, but you gotta take a second and think, okay, well, it sounds good. What's the bear case? What's the downside? What would have to happen for them to not succeed? And those are the things that I'm asking right now, because I'm interested in SPACs. I said that I would buy IPOE. I'm waiting on that one. I would buy other SPACs. You just got to take the time to do some research right now. And if anything, they're more appealing now that they're all basically back to par.
Yeah. And so in the chat was mentioned Mark Rees talking about how hesitating to add more until mergers not complete. And that's okay. That's okay. It's all right to wait to the de-SPACing and then look to see if you can kind of bottom fish there. I have no problem with that approach. The biggest thing is start doing the research, the in-depth research to pick your companies on which ones you want to add to that portfolio. It's not necessarily, like I said, just load the boat in one play. This is not what SPACs were that's not what they were invented for, and that's not what the asset class is for, guys. The asset class is to give an opportunity for us retail traders to go ahead and look for an investment approach. And that's what I think is the important part. Yeah,
and thinking about it like this, like SPACs, they're not their own asset class. They're just stocks. They're just stocks. So if your portfolio is 95% stocks in the first place, what kind of stocks, right? SPACs are pretty much all growth companies. So you own all growth stocks, then you're going to go up and down a lot. That's how it goes. Do you own, other areas? Do you own broad-based ETF? Do you own value stocks? SPACs are growth, and you all know that. I'm preaching to the choir here. I at least I think I am. So a portfolio, and I think you've all learned this. We've all learned this. A portfolio of just SPACs is not a portfolio that you should probably be looking at every day, because
that's not the intention, right?
Yeah. So I'm interested in SPACs here way more now than I was at any point in the last year, only because and Mitch has been saying this too, right? A lot of people have gotten shaken out. And now is the time to strike if you can pick a winner. And of course, it's easier said than done.
Yeah,
I'm not confident in my abilities to do that at all, right? But this is when that happens. So I'm trying.
I agree. I mean, I'm not going to say that I'm 100% going to get everything right, but this is what I like to do, guys. And if you guys have ever seen me on Pre-Market Prep or any other show that I do, it's always about story. And then where did I learn this from? Shout out to the man himself, Triple D, Dennis Dick. He really expanded the strategy to another level for me. This is something I used to always look for, but I didn't know how to necessarily attack it. Now, one of the things that I do, guys, is I combined it into a 3-variable approach, right? I talk about this on Money Mitch, but let's talk about it here on SPAC Attack. So it's always the story, the fundamentals, and the technicals. And it's all three that need to match up for you to really think that this is a something I need to jump into. Not just something because sometimes the story can sound great. Like, let's say, and not to mention it, I mean, I took a swing trade on it today, but CCIV, the story sounds amazing, right? The story is
They all
as hype as it gets.
They all
As
sound.
hype as it gets.
Yeah, they all sound.
You know what I mean? But when you look at the fundamentals, what do you see there? What do you see in CCIV is that we need some cars to really come out, right? I mean, if we don't get those sales to hit the bottom line, then definitely we're not going to see the growth that we want to see. And then as you go into the next one, the technicals really matter. When the stock was ripping, that might not be the time to jump into a stock because the technicals are not showing you there's some bottom support, some kind of level that you're going off of. So I think this is important for all SPACs now. Now that you're getting them down to those levels, now that you see those bottoming, now you can approach it. And also one of the things that we've been noticing is, and we've given you a list of the calendar dates. Look how these companies do their first reporting. That's when you're going to really start getting some more in-depth look into what the fundamentals, and then you can match fundamentals, technicals, and story. This is so important, guys. Yeah. I'm telling you, if you learn to do all three, I think you're just going to give yourself a way further chance, a higher probability for you to get into the green. And this is the important part. I'm not 100% right on this, but one of the things I want to do is try to help you guys find a way to not just go off of one variable, but three.
Yeah. And a lot of times, maybe the solution, the answer is to wait. Is to just wait, right? I mean, think about DraftKings, right?
Patience.
How long has DraftKings been public? We just this morning finally have our first year-over-year comparison of DraftKings as a public company, right? Q1 of this year to Q1 of last year, we have statements that we can compare for the first time. That's as of this morning, and they've been public for over a year, right? I mean, it takes time. It takes time for these things to shake out, to mature as public companies. And so a lot of times these are going to be several year stories, if not longer. So patience and now is the time to strike, because now is the time where like I consider right now to be like 2002 for like tech stocks is what I think right now is. 2002 for tech stocks, for SPACs, I mean, right? Because they're all hammered. Well, not all of them. Most of them are hammered, crushed, destroyed. Okay, same thing it was in 2002. Amazon crushed, Microsoft crushed. Some of them, like Amazon, came back with a vengeance. Others, like Intel, never got back there, right? So there are going to be winners, there are going to be losers. We don't know which, but now is the time to strike, in my view. All right, I think it's time for Power Hour.
Yeah, Power Hour is going to be coming on. I think they have a interview today. Dude, go ahead and check on that for you.
They have a few. I never know what these guys.
All right, but before we get on out of here and before you give them that, I just wanted to state the biggest movers of the day: Clever Leaves, Cloves, have CM Life Sciences, TPGY, Genie up there. Definitely Romeo showing up. Playboy is bouncing back, man. I know that you were surprised on that Playboy action, but definitely bouncing back there. So definitely keep your eyes on that one. IPOE, which is on Spencer's radar, definitely watch that one. RSI, like mentioned in the chat, is going to be having earnings next week. So keep your eyes on RSI. It's down there towards 12.18. I'm going to keep watching a bunch of these SPACs and keep letting you guys know what's moving. But definitely, guys, stick with us as we always do. Hit the like button. Looks like we didn't break 100 today. Come on, guys. I'm giving you guys this gold, giving you this interview. And really, I mean, I could have canceled, guys. I could have canceled and been like, nah, the community isn't worth it. But you guys are worth it out there because I see the support out there. Support us. Hit the like. You guys already know. Power Hour coming up next. If you like some hype and you like the stocks that move, stick with the Power Hour. We'll see you guys there. We'll take you guys over there.
They're going to have a crazy show.
And before I do that, just because it's been a long day, let me make sure I do the redirect on.
Oh, it's good. Mitch, it's good. It's good.
All right. Just making sure. I love Power Hour. Later, guys.
It's